Good evening, everybody. It's Scott Gillum with the ShadowTrader short video for this Sunday on the 6th of April. This one's not going to be that short. After watching, I hope you did, the video by Peter Resnicek over the weekend and his take on the market, I've got a few things that I would like to highlight and a potential trade that we could use in this uncertain type of market. First of all, here's the SPX from the before the COVID shutdown all the way to the low, and the big rise that we had that ended here in March and April of this year, and now we're on a retracement. When I take a look at the low from COVID and get the first touch, we have definitely broken that longer-term trend line. If I take this chart and just give us a range of where we rolled over hard based upon an economic or market moving incident and then started to rally back, we've got this nice area between this 49.50 and around 52.50. Let's enhance this chart a little bit. I've also got a trend line here that starts from the beginning of the opening of our economic industrial complex once again, and then the flush that we had. And that one comes around 49. Let's just make this a little bit more evident by going here to what the chart shows. In COVID, we had a drop of about 27.7% before we rallied and returned back to the bullish side. So far, we have dropped less than 20% from our highs here in 25, and a 20% drop would put us down to this 4,900 level. Hence, if I take a trend line from this June mid-year COVID, kind of having a handle on COVID, and just draw the trend line using the first touch of where we had the 1031 big flush in the market, the first one that really came about, that puts us at that level. Enhancing this as well, put a Fibonacci from the COVID low to the all-time high that we have so far in the SPX. This puts our current level around the 38.2 retracement. 50% down around 4,800, 38, 5,100, and this bracket area or this range that we see here in the chart from the March high to this April low makes a lot of sense as to where this market could dip down to or recover to. The last piece on this chart are these gray bars, April, May, and June. These are market maker expectations for where the market can move. Low for April down to 45.50, the high up here at 5,600. May, we expand that to 5,700 and all the way down to 44.25. Out to June for the end of the current earnings period, that expansion, this is one standard deviation by the way, goes down to the 53.50 or 43.50 all the way up to 57 or 5,800. So those are your potential moves in this market within the next 3 months, which is earnings. Now, speaking of earnings, coming up this week, we've got major earnings starting to come in. J.P. Morgan, Morgan Stanley, Wells Fargo, all the financials front load. Then we get a transport, a few more financials, United Healthcare in the healthcare business. Then we get our Fangman stocks, Netflix. Then we get discretionary of Tesla. Then we get some of the energy coming in. ExxonMobil, Alphabet, back with their Fang Man. Apple comes in right at the end, or Meta, Apple, and Amazon come right at the end of April into May. These 20 or so stocks will set the tone for what's going to happen for earnings for this quarter. Another thing I want to bring to your attention, and you all know this, is the tariffs are now in play. The impact on those tariffs may be long-term. A reciprocal tit-for-tat type of situation brings in a lot more uncertainty. Stating again, earnings begin this week. I expect those earnings to be normal from what has been already kind of gotten through the analyst projections. But here's the big crux. I don't anticipate guidance going forward from many of those companies. It's due to the uncertainty of how this tariff situation is going to impact their ability to make money going forward. So I'm not looking for guidance. Moving on to things coming up. We've got Fed rates coming. We've got a May meeting. We've got a June meeting of the Fed. I do not expect a rate cut before the June time frame. Peter's thinking that the odds are getting better in May. That doesn't make the Fed any more adept at making a rate cut with these tariffs and the uncertainty that it brings to inflation and a slowdown in the economy. We also have the unemployment or the employment side to the dual mandate that the Fed has, and I look for employment losses coming pretty quickly. We've got those because of DOGE, Department of Government Efficiency, and the business slowdown, all impacted by these tariff uncertainties. So I don't expect a rate cut until before the June meeting. Some of the things that I've been reading on my commentary from brokerage firms, trader comments. Most of the pundits are saying it's a wait-and-see type of market, which means we could languish at these levels for quite a while. The buy-the-dip mentality that we've been in for the past, let's say, 4 to 5 years is now definitely out of favor. And the equity market is definitely not the big mover right now to this overall investment community. It's bonds and foreign exchange which are running those markets now. So I take a look at the SPX. There's the expectations for the next 3 months. But let's go on to the chart of the trade, which I like to use, the SPY, which is the ETF for the S&P 500. And here on the SPY chart for a daily, long term, we can see that COVID shutdown started in back here in 21. We had the little resurgence back in June. We had the full COVID debacle being over with, so to speak, and the economy started to crank to the upside once again, and that's where we got this big run to the upside. Along the way, we had a few hiccups or a little bit over excessive price action. This one came in on July of 2023. That came close to the tops that we had before the COVID was shut down, and we retraced about 30% of that COVID move. Then we started to run back to the upside once again until we had an incident that happened with CrowdStrike causing major internet outages throughout the whole marketplace, bonds, equities, and the whole bit, and that dropped the market on a very swift move to the downside, and that happened in April of 24. Well, being resolved and back to the upside, we made another move to the upside, and then we came into the next situation, the carry trade, yen carry trade, where interest rate free borrowing and selling kind of came to a screeching halt And the unwind of this yen carry trade brought the market to its knees once again. Again, overvalued, undervalued, and we now climb back. Then coming into the end of November of 24, we had the election. So Donald Trump takes the presidency, and things look very good all the way through till the first of the year, and things then in the economy start to get a little bit more uncertain. And as we get through the February time frame and the talk of a tariff situation starts to unfold in the marketplace, we top out on our all-time high for the S&P. And as you have seen, as of Friday, we've made a huge move to the downside. So this is all well and good for those that were short, but where do you go from here? This is only looking in the rearview mirror of what's happened in the past. So going forward, this level of 4,900 or 475 or 480 on the SPY is a level that we need to be aware of because that's around this COVID shutdown. And that would give a lot of people an area that they would say, okay, we're at the bottom and we're going to make a move back to the upside. I am not 100% convinced that we've seen capitulation at this point. But we do have a range that we can use to play a credit trade against this ETF. Noting we've got a market maker move, expectation up to 560 or all the way down here to 450. So here's a proposal. If we continue to flush, this trade is suspect and you may want to adjust the downside options used. If it's on the upside for a big recovery through Monday, Tuesday, and Wednesday, you're going to want to adjust the upside. But that being what it is right now, let's take a look at the proposed trade. All right. Again, 560 top side, 450 bottom side. So if I take a look at putting on a trade using the end of April, again, earnings are going to be well ensconced in how the traders are going to be trading through this next few weeks. So at the end of April, if I take a look at the 555 call, selling that, and then buying the 560 call above it, taking the 455 put and selling the 450 below. Let's go back to the chart for a second. So I'm going to play $5 under the top and $5 above below on this trade. That gives me an iron condor that's worth about $1.35 in credit. All right, I've got $5 worth of risk. I get $1.35 in credit. That means I've got $365 at total risk. Ladies and gentlemen, that 135 credit against 365 in risk gives me a 37% return in the time frame from now until the 30th of April. This also gives me a couple of nice avenues. Here's my break even down here at around 452.50. This is one standard deviation on both ends of that. I am just barely inside of one standard deviation. As you can see, we've got about 70%, or pardon me, a 62% probability of total success on this trade. Again, if things change on Monday into the end of the day about the way the market is going, you may want to adjust your strikes. If we go higher, adjust this one up to the 560, 565. If we still are moving to the downside, you may want to move this to the 450, 445 level and hold on to about $1.25 to $1.35 in credit, and the time frame still looks good on April 30th. All right, folks, there you go. Market is still uncertain. Things are still fluid. Buy the dip mentality, not quite there yet. Bottom probably, or could have been put in, but we don't know. So going forward, I'm going to play both sides of the coin, a little bit of upside, a little bit of downside, and the secondary exit to this trade, this iron condor, I would not be opposed to be buying SPY shares in my portfolio down here around 450, or if it continues to the upside and proves me wrong on an upward move, buying the shares above that 555, 560 level for further appreciation to a new high. There you go. ShadowTrader short for the 6th of April. SPY, Iron Condor on this uncertain market. Thank you.
Hi there, this is Scott Gello from the Stock and Options Room of Live Trading Suite. If you enjoyed this video, please hit the like and subscribe buttons down below. And if you'd like to trade live with me in real time, click again that link in the description below. Good trading to you all, and I'll see you in the room.